Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Phil, I think we've got a show and a half today. You know what? When I was pulling together the headlines, it was a case of what on earth do we leave out? Yeah, there's been so much happening over the last 7 days, and we have said before that after particularly busy weeks, that was unprecedented. But wow, the past 7 days,
you do
make it up.
Well, yeah, and I was thinking this morning, you feel for the people that some of these nationals, particularly the Financial Times, because we get the Financial Times notifications, but every day it's kind of, you just got this list in your email box of all the FT new automotive headlines that have hit overnight whilst you've been sleeping, that you wake up to, and you think, I can't read all of them. Plus, it goes over your subscription if you're not too careful as well. So. Can you imagine those guys there trying to keep up with it?
Talking of sleeping, it only kind of goes quiet when President Trump is asleep.
Yes.
As soon as he wakes up, everything fires up again, doesn't it?
A few people might be wishing that might be a little bit more permanent. But no, as you say, trying to keep ahead of it. So apologies, listeners. We obviously we'll try and cover little bits of it, but obviously, as you can certainly imagine, trying to keep abreast of what's happening with the tariff situation in the US and the global geopolitics is quite challenging to say the least. It's forever moving and, shall we say, fairly fluid. Curtis.
Yes, yeah, most definitely. So we'll start with a couple of shout outs, and first one this week is it's the launch of the 2025 Barbara Cox Woman of the Year competition, which I know you're involved in, Phil,
yes,
because it's part of Cox Automotive. But there's a very good story on AM Online about the launch, which we'll put a link into the newsletter for. But it's being supported by AM and Fleet News, isn't it?
It is, yeah, and it's a fantastic event and gets well supported from across the sector. And as it will say in the press release there, this is for nominations for women within automotive that you think that deserve this award. And there's been some fantastic winners over the year, and a friend of the podcast and a personal friend as well last year, Jackie Barker, who is the global OEM strategy director there at Keyloop, was one of the 6 shortlisted last year, and she was the winner. But fantastic event, and over the years they've had Sarah Sloman, who is the chief strategy officer at EV FinTech Business, and many others over those years. So it's a fantastic event, and anybody listening to this morning, just nominate. If you've got a colleague or somebody within your organisation that you think is deserving of this award, then just get them nominated. Check the link on the AM website and nominate them, because it is a fantastic event.
Yeah, and the closing date for that is the 16th of May, so plenty of time to get your nominations in.
There is, yeah. And we must say thanks this week to Layla Moss-Kelly from Ben, who sent us the details of the 2025 Ben Ball, which is happening this year on the 10th of December. It's down at the Hilton Park Lane. There is the full details on AM Online, which the link will be on the newsletter on Monday morning. And again, this is an event that's in a lot of people's diaries each year to attend, and it's a fantastic event to put on.
Yeah, it's really the sort of end of the year Christmas party for the automotive industry, but it does raise a lot of money for the Ben charity. And as you say, it's back in Park Lane. It's at the Hilton Park Lane, because I think it was at Billingsgate last year, maybe for the last couple of years, but now back in the West End. And it's very popular. It's very well supported. It's a great event, and it's brilliant for networking. But as I say, they do raise a lot of money for for a good cause. So all the details are now available. So head over to the Ben website for that.
Yeah, definitely. And finally, this week we've got the Stephen Whitton, who joins us the second half of this morning's podcast, and this is his latest Men-able Moments for the month, and on the theme of embracing change and his experience of mentally wealthy company from his perspective as a customer. So please do stay tuned for that one at the halfway point.
You're listening to the Motor Trade Radio podcast, powered by Motors.
So headlines this week come from AM, Motor Trader, Car Dealer, Motor Finance, as well as the FT, Reuters and City AM. So the first half of this week's show will look at the latest new vehicle registration data from the SMMT, starting with a return to growth for the new car market in the all-important March plate change month as retail registrations grow, but the UK van market declines for the fourth consecutive month. And staying with new vehicle sales, how a surge in EV pre-registrations poses challenges for the used car market, according to the Vehicle Remarketing Association. Then, after the break, we'll take a look at the government's changes to the ZEV mandate and ask if the rules are now fit for purpose or just watered down. And we'll take a look at President Trump's automotive tariffs and how they're impacting the UK and the US.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
So, as Curtis has said there, we're starting off with the new car registration and LCV registrations for March and the year to date. These were published last Friday. We didn't get a chance to cover them on last Saturday's podcast. But as I say, we've got the figures here from both the AM have covered the story, but the SMMT, and this is that March car sales surge, turning point or temporary boost in an industry under siege. I quite like that title. And it's saying do the new car registration figures mark the start of a positive trend or a one-off in an industry under pressure from cost, tariffs and supply chain fears, and saying that many companies will be challenged to the limit, which kind of sums that whole up, because I think that's the feeling everywhere in today's stories. But it, as we say there, the figures in March were 357,000 new car registrations, and that posed a 12.4% year-on-year increase, and does take the year to date up 6.4% to just 580,500. So what are your thoughts around this one, Curtis?
It's an interesting one, isn't it? Because for the last few months, we've been reporting how retail demand has been down. But certainly for March, retail demand was up. It was up 14.5%. Taking a market share of 41%. Fleet was also up because fleet's been very strong now for a number of months. So fleet was up 11.5%, taking a 57% share. So certainly a lot of strength there, but also a lot of activity, certainly on the retail side.
Yeah, you're right. And we'll get into sort of the EV registrations and the BEV registration share in the short instance, talking about the ZEV mandate. But as you say there, Curtis, I think really a big shift in the registration. I think behind all of this, we've obviously got the particular potential influx of registrations on EVs ahead of the luxury car tax that came in on the new financial year in 1st of April. So there are reports that a lot of the registrations were pulled forward into March to get ahead of that new tax level in either retail or in that fleet market. But again, a lot going on in the market at the minute, and around sort of trying to get those registrations. First quarter of the year is key. But if you look at the registrations by manufacturer, before we get into a little bit more detail, there is a lot going on there by manufacturer, and probably the one that you and I were discussing before the podcast, Curtis, was BYD. And we talk a lot about BYD on the podcast, and they're very much there in the media and through the social channels. And they registered 6,480 in the month of March, which takes their year to date to just over 9,000 in the first 3 months of this year of trading. But I think, reality is that a lot of new dealers have taken on that brand alongside Amalda and JQ and others. And a lot of activity would have been there around new car registrations for demos, courtesy cars, display cars for each of these new car dealers. But they have taken over quite a few of the legacy OEMs, haven't they?
They have indeed, yeah, and it is interesting. If you do have time, it's worth heading over to the SMMT website and just looking at their A to Z listing of the manufacturers and what their registrations were, not just for the month, but we're also looking at the quarter now. And you made some interesting points there about BEVs. Yes, BEVs had a very good month, up 43%. But I think, as you alluded to, we can assume that a healthy proportion of those will be some of those more expensive BEVs, which now incur a surcharge. So vehicles priced over £40,000 now fall under the VED expensive car supplement additional tax. So they would have been done very well in March as a result of that. But even with that uplift of 43% for BEVs, the market share for the month was only 19.4%, and the ZEV target, as it stands, is 28%. So still a long way shy of that, isn't it?
Yeah, it is. Yeah, that's kind of plateaued because the year to date is only 20.7.
Yeah.
So only marginally up from the full year last year. And as I say, we'll get onto that government revision, or the Back in British Business announcement that was on Sunday evening of last week as the week closed off. But yeah, as you say there, a lot of activity. And I think just to support that a little bit, Tesla, actually, with all the controversy surrounding Tesla at the minute in the political environment, they actually were up month on month, year on year, sorry, up 2.2%, I think, no, 2.42%. So just over 7,000 registrations from 6,900 last year. So, again, still, you wonder how much of that is either company car replacement or actually, to your point, Curtis, bringing forward those registrations, because a lot of the Tesla product would have been privy to the new luxury car taxes as well. So yeah, a lot going on in that new car market at the minute. And just before we talk about vans, just a little bit of that European activity. France was down 14.5%, down to 153,800. Italy was up 6.2% to 172,200. Spain, big increase in Spain there, 23.2%, up to 116,700. And Germany marginally back by 3%, down to 153,497. So again, a lot of volatility across those mainland Europe registrations at the minute.
Yeah, everything really is up and down, isn't it, on a sort of what is pretty much a daily basis now. So heading over to motor finance and having a look at the new van sales, the headline there is UK van market declines for fourth straight month, reports the SMMT. So this is the figures in from the SMMT, which shows that van registrations were down 3.2% for the month. And that's based on sales of just over 51,000 vans in total. The SMMT attributing the decline to weak business confidence impacting investment in new models. So no surprise there. And we often say on the podcast that the van market is very much a barometer for the economy. So when the economy is doing well, van sales go up. When the economy isn't doing so well, we start to see the more challenging van market in terms of new sales. And I think that's what we're seeing here.
It is, yeah. And I think Mike Hawes, who's the CEO at SMMT, echoes your point there, saying that vans, pickups and 4x4s are critical for business operations across the UK. So 4 months of fall in investment is concerning and reflects the weak confidence, with further constraints set to impact the pickup segment, which is obviously now the VAT on double cab pickups, which is now coming up, which is a bit of a concern across the commercial vehicle sector, as well as what impact that will have on registration volumes. And sticking with the activity, particularly around EVs, and heading over to motortrader.com, and this is the VRA, who I proudly chair, warning for dealers over pre-reg stock. And this is from analysis from Lewis Maxwell at Auto Trader, who's also a board member of the VRA, that's been looking at some of that EV pre-reg activity on their platform.
Yeah, it's always interesting to hear about pre-reg, because it's a topic that went quiet for a long time. I mean, we remember the good old days of pre-reg, but there's an interesting quote here from Lewis Maxwell, who says the figures show that the general pre-registration activity is now up by 23% year on year. I mean, that's really the figure that caught my eye. So that's year on year for 2025. And that's based on stock with less than 100 miles on the clock. And he goes on to say it's quite a rise, but still some way behind pre-pandemic levels. And within this, he goes on to say that EVs account for around 23%. So it's around a quarter, which he goes on to say this is in line with their share of the new car market, but they're taking much longer to sell second-hand because manufacturers are heavily incentivizing the purchase of brand new EVs to stimulate demand. So we've got this dilemma, haven't we, playing out in the industry, this dynamic whereby pre-regs nearly new are competing with more competitively priced new EVs.
Yes. Yeah, you're right. And I think, what we were talking just before the recording, there's cars that are on Auto Trader, electric vehicle cars that are essentially brand new on delivery mileage with one previous owner, which is indication that it's a tactical registration, that are well over a year old, that are still on their advertised. So again, to your point, competing now, these used EVs, these nearly new EVs that won't be applicable to the new campaigns. They won't be applicable to manufacturer subsidised finance or deposit contributions and things like that, because essentially they are a used car. All that money is being used up to tactically register it. So, and to your point, that those are now competing around the new, and how consumers now can get into a brand new EV with deposit contributions, subsidised finance, etc. So, it's not a great position for the sector to be in on that.
No, and some of those vehicles they'll be 12 months old, so we're looking at some fairly late plates there competing with some brand new plates. So that's a dynamic that's got to play out. So we'll keep tabs on that. But we'll be back with the rest of the week's headlines after this month's Men-able moment from our mental wealth guru Stephen Whitton on the theme of embracing change.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are, and on your podcast feed. Next up is our latest Men-able moment, looking at mental wealth and well-being awareness and best practice in the automotive sector. with me, Stephen Whitton.
Yeah, hi everyone, it's Men Able Moments time again. Hope you're well, and I hope March has been good for you if you're involved in new car sales. I've been hearing some good stuff across the industry about that, but it's also a very testing time globally. And I don't know about you, but every day I wake up and I'm resisting putting the news on because I just think, wow, what's happened next? It's not the actual phrase that I use, but I'm sure you can use your imagination. But anyway, the last few weeks have been, what can I say, trying. Because March is typically a bit of a downtime for me because the industry doesn't want to see people like us at a time when it's trying its best to hit targets and all the rest of it. And it, for me, has coincided with a house move to not just a new house or flat actually, but a new town and in a totally new county and with a whole bunch of people that I don't know. And it's, wow, just blown me away, I've got to say. And it's made me realise that whilst change quite often is inevitable, when it's self-inflicted change like that, you really do have to embrace it. And it's a good job that during the pandemic, when I first started Men Able, I made a point of saying that I'm going to choose the path of hope over the path of despair. Because those two lines blur very often, and it's the path of hope that really helps you to navigate change and to do what you can to be optimistic and realise that, you know, some change is inevitable and things are going to be different. And it's about how we embrace that and how we mentally prepare for that and what goes on in our minds to get us ready. So I've made the move, gone into the new flat, and what I've noticed along the way is that there have been many companies that I've interacted with, and it's fairly evident as a customer which of those companies are what I would describe as mentally wealthy. And they are the ones, and I'm talking, of course, about the utility companies like the local councils, doctors' surgeries, you know, all of those other organisations and businesses that you have to suddenly interact with all at once when you're moving house. And it's highlighted for me this fact that the mentally wealthy ones shout out loud and clear, which organisations have got their stuff together. And what I mean by that is it's obvious to a customer which of those companies do not follow a process, do not follow a structure, do not follow a script, if you like, but are the ones that treat you as a human being. And they are curious, and they are interested, and they genuinely, in a kind of back to basics way, treat you as a customer the way you want to be treated. Now, I've had another interaction more aligned to our industry in the last couple of weeks in that I've ordered a new car. And I went visiting a few dealers to check out what I was interested in. And I've got to say, one dealer in particular that I went to really ought to do better. And it was so obvious to me as a customer. Now, I know I've got inside information because I know the industry, but it was so obvious who was working to a process, who was working to some kind of structured approach, and who was really desperately trying to hit a target. And I was there to find out a bit of information, and I desperately wanted these people to be interested in me, to be curious, and to understand what my needs were. And lo and behold, that didn't happen. And it just shone out for me, as I said, which of those companies appear on the face of it to be mentally wealthy. And what I mean by that, of course, is that they're not working to a structure. They have the freedom and the courage to interact with each and every customer in a different way. And guess what? They're going to get great results. So take from that what you will, but for me, the last couple of weeks have been a fairly intense period of really seeing for myself what it feels like to be a customer on the receiving end of mentally wealthy businesses versus those businesses that are up against it or not hitting targets or are trying to follow a structure or a process and missing that human element. And within that, it's obvious which of the people you're interacting with are enjoying that process as well. So there you go. Have a think about that. Because I know it's been a busy period. We're coming into we're in Q2 now, and the weather's lovely, but there is an awful lot of stuff going on in the world that's very easy for all of us to be a bit discombobulated. So help your people to be as mentally wealthy as they possibly can, and your customers will love you for it. If you want any more help and support with anything, you know how to get hold of me, stephen.whitton@menable.org. Or you can check out the page on the Motors website where we have these articles and videos. And get in touch and let's have a chat. All right, take it easy and we'll speak soon.
Well, obviously, I mean, speaking from the heart there in terms of his experience of say, going buying a car, and obviously you're talking about his moving house as well, and experiencing the various different levels of customer service through other areas of industry, and how it does play into other areas of industry.
Yeah, it's always an eye opener for. I mean, we're in the industry. Steve's in the industry. You and I are, but it is always an eye opener when you have to go to a dealership as a customer, whether you're buying a car, whether you're getting your car serviced, and you do want to be blown away by the customer service. You really do. And I must say, I had my car serviced at a franchise dealership a couple of weeks ago. And the experience I had from the moment I phoned them was absolutely faultless. It was brilliant. It was kind of reaffirming a lot of the stuff that I've been writing about over the years, how customer care should be delivered. And this one particular service advisor, he was absolutely spot on, and he made the whole experience totally painless, effortless, and I will be going back to that dealership. So yeah, it's great when it works out like that, but it's not always the case. And as Stephen is highlighting there.
Yeah, definitely. I couldn't agree more. So back to the second half of the headlines, and we'll swiftly get through these because there's probably not a lot of detail we want to go too much into because it can change. But this is about the ZEV mandate and obviously the Trump tariffs as well, and what's happening in that environment. And we're heading over first to the Financial Times, who covered the announcement on Sunday evening from Keir Starmer there, Sir Keir Starmer, I should correctly reference him as, but announcing a watering down of the net zero ZEV mandate, backing British business, as it was headlined. And the Financial Times have picked this up saying EV targets watered down to help tariff hit UK car industry. And this is saying that the UK government is watering down its targets for electric vehicles with lower punitive fines in order to support the domestic car industry after Donald Trump imposes a 25% tariff on the global automotive sector's export to the US. Now, to put this in context a little bit, and there is a detailed update on the government website. So essentially, they've watered down the fines from 15,000 per vehicle down to 12,000, for cars, and from 18,000 down to 15,000 for commercial vehicles. They've now extended hybrids, and this is plug-in hybrids and full hybrids, so not the mild hybrids, out to 2035. But your ICE vehicles for cars still are banned from 2030, and ICE commercial vehicles have been extended out to 2035 as well. And alongside this, there is the bit around the credits as well. So whereas you could get credits and buy credits for one, you can actually now swap between cars and commercials. So if you're up on your car credits, and your percentage, you can switch those to your vans if you represent the commercial vehicles as well. Now, to caveat all of this, and you can see I'm all over this a little bit, Curtis.
Yeah.
Yeah.
You're doing well, Phil.
Yeah. So the one thing that the industry is questioning, that the 28% ZEV mandate for this year, for 2025, still stands. So pure electric vehicles. And the 16% for commercial vehicles still stands for this year, which relates back to what Curtis said when we were reading the new car registrations for year to date and March. Now, bearing in mind, last year, it was reported that not many manufacturers failed the ZEV mandate because of bought credits and switching credits, etc., and using up future credits. We finished at just short of 20% against the 22%. This year, we're running at 20.7% year to date, and we've got 28% to do. And vans last year achieved around 6%, depending whether you look at sub 3.5 tonne or above 3.5 tonne, and they've got 16% to do for this year. So it's not really changed the market for this year, has it, to help the industry?
No, I must admit, I was totally underwhelmed.
Damp squib.
Yeah, a total damp squib. We'd been expecting this. We'd have been expecting the announcement. The consultation's been going on, and a lot more could have been done to incentivize new EV sales. I think scrubbing £3,000 off what is a very expensive fine for vehicles that exceed the quota isn't going to make any difference. We're still talking about a £12,000 for each, £12,000 fine for each car, £15,000 for each van. So I don't think that's going to make any difference. I think what we needed, what the industry needed, what the sector needed was incentives for retail customers to buy EVs, and it hasn't happened. And sort of tweaks here and there. It's good that the hybrids have been extended, and that's been confirmed. There was also a concession to some of the smaller brands, the sort of smaller
Aston Martin and a couple of that.
Lotus, Caterham, who will be exempt. They will be able to carry on producing ICE vehicles. I
think they've got their own problem with export to the US, haven't they, in the meantime?
Well, exactly. Yeah, they've got that on their plates as well. Within the FT, there is a quote from Lisa Brankin, who's the boss of Ford in the UK, who describes the government's response as being a small step in the right direction, adding that it's not the giant leap required to address the especially challenging electric vehicle market conditions. And I think she's absolutely spot on there. It was a missed opportunity with all the noise going on at the moment, because, okay, whatever was being decided on the ZEV mandates and was announced on Sunday was probably decided before the tariffs became a factor. But so much more could have been done, and it's not going to stimulate the EV market in the way it needed to be stimulated.
No, I couldn't agree more. I mean, there was obviously they've announced alongside of this, and we must acknowledge it, a 2.3 billion support fund as well to support infrastructure and growth, etc. But that doesn't hit the consumer. It doesn't hit the back pocket. It doesn't change the challenges for this year. And if you refer back to when we talked in sort of January, February time around the 2024 numbers, and at the time, Mike Hawes had announced that the subsidies and incentives cost 4.5 billion for the manufacturers last year to achieve the 22% overall to avoid fines. That's now gone up to 28% this year. And if you look at the SMMT forecasts, rather than my own on the volume for this year, they're forecasting a 23.5% expectation for BEV registrations, which will be short of the 28%. And I think a 9.5 for commercial vehicles against the 16%. Now, if you do the very high level calculations, the shortfall, the fine reduction from the 15 and 18 to 12 and 15,000 in fines, it's £300,000.
Yeah.
Against a cost last year of 4.5 billion. So whereas we welcome anything on this, I just don't think the government have really thought it through as where they could have done more, should we say, to help the industry today on the adoption to electric vehicles. And I'll get down now from my high horse.
And following on from that story, I mean, it is closely related, covered by AM Online. The headline there is "Government confirms petrol, diesel and hybrid van sales permitted until 2035." And it kind of says it all in the headline there. And this will be welcome news to certainly the dealers, the industry, and indeed to buyers. And the announcement made by the Department for Transport on the 7th of April aligns van regulations with the government's revised 2035 phase out for ICE cars. So previously, sales of small combustion engine vans were expected to be banned from 2030. So there's a bit of clarity there, and it's certainly been welcomed by Sue Robinson, Chief Exec of the National Franchise Dealers Association, who says that the NFDA supports the government's decision to extend petrol and diesel van and LCV sales allowances until 2035. This is a positive move and optimistic for the next few years for commercial vehicle dealers. So some clarity and certainty there for that part of our sector.
Yeah. And finally, we've got two stories here. And as I said right at the start of the show, it's very fluid, is the US tariff situation. But we've got a story here from both Reuters and City AM. And the Reuters one is Trump draws criticism from Michigan business and auto groups as auto tariffs remain. Now, this is on the fact that obviously on the 9th of April, President Donald Trump on Wednesday paused the tariffs for 90 days, but he isn't halting the 25% tariffs on automotive imports and looming tariffs on auto parts as well. So, and it's obviously drawn significant criticism from the Michigan business and auto groups because, you know, there are cars that are sat in ports from both UK and Europe, amongst others, that the manufacturers are now not releasing. And there is retailers in the US that are, primarily make their business on international import vehicles as their business, and they're not getting any product, which is getting quite painful, I believe.
It is, yeah, and there's a lot of commentary from American businesses that are being impacted. And this particular story, I mean, it's of particular interest because it's citing Detroit, which is very much the home of US car manufacturing. And within this particular story, which, as you say, it does actually clarify that the 25% tariff on all imports of cars into America is still being held, even though other tariffs have been changed. And this story, it cites the Detroit Regional Chamber and the Michigan Auto, and who are calling on President Trump to protect the automotive industry's complex international supply chain framework from harmful fragmentation that weakens its global competitiveness, something which is kind of being overlooked because certainly a lot of what I'm hearing and reading is that the implication is that American cars are American cars from the ground up, but of course they're not, because parts come in from Canada, Mexico, and all over the world, and this is seriously impacting American producers.
No, you're right, and this is it. It's the whole supply chain away from we hear that VW or VAG have got Audi, I think it is, that have got 37,000 cars sat in port in the US, which is equivalent to 2 months' supply of vehicles that they're not releasing. So that means that you've got 37,000 vehicles that are not going into the dealer network to sell for 2 months. So, this is hugely impactful. And to your point, the whole supply chain, because of the tier 1 to 4 components, have also got tariffs on them that are being held up and impacting those sides as well. So it's coming from all angles, this one. As I said right at the start, this is very fluid at the minute, but there was a lot going on. It's a very complex industry, and you pointed it out last week on the podcast, that with that supply chain and the movement of the mini parts and things like this around the globe, and that's what's playing into this as well. And just finally, the final story, I mentioned it just then, with City AM, and a bit closer to home, saying that Jaguar Land Rover, Donald Trump's tariffs threaten US growth. Now, to put this in context, last year we produced just over 750,000 vehicles. I think 603,000 were for export, of which 16.9% of those vehicles went to the US. And I think probably JLR are probably the lion's share of those vehicles leaving the UK shores to the US there.
Yeah, because within this story in City AM, it says that Jaguar Land Rover, in terms of its volumes, export volumes in the fourth quarter last year, actually increased by 14.4% in terms of what was being exported to North America. And bearing in mind that that's purely Land Rover at this stage, because as we know, there's no new Jaguars being produced and sold as they recalibrate factories. So we're talking about big numbers here. And within this story, it says the growth has been revealed after Jaguar Land Rover confirmed last weekend that it will pause shipments to the US as it works out the best ways to address the new trading terms. But as we keep saying, this could change.
Yeah, it is. And I think we put a disclaimer on today's headlines that these were headlines at the point of on the 10th of April at the time of publication. So, because, things at the minute, things can date very, very easily. But I think just to wrap up there, say all these headlines will be available on Monday's newsletter, where you can read a lot of these stories in a little bit more detail. As I say, a lot of them are very, very quickly, very fluid, should we say, in terms of what's happening there. But we'll try and keep you ahead as best we can as we work our way through some of these. And your job each week is a little bit tougher, isn't it, Curtis?
It is, yeah, because we've basically just covered two topics this weekend, and probably one of our longer podcasts. But I think we've covered all that we need to at the point of recording. So that really is all for now. Many thanks for joining us on the Motor Trade Radio podcast. Until next weekend, it's goodbye from me,
and it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.